Hello all and welcome back. I hope you're all doing really well. Another big update today is there's more information to do with the White House policy that is being released for cryptocurrency, as well as more information about Hbar, use cases and partnerships. And we're going to talk more again about DeFi as more and more use cases are ramping up and coming on board into the space. As I've said several times in previous videos recently, I am predicting a semi-decent explosion in the ecosystem as soon as it goes live. First things first, if we look at the crypto bubbles for the general market overview, we can see that a lot of cryptos at the moment are taking a bit of a battering. Again, this is what I've said to you guys time and time again since the escalations between Ukraine and Russia have continued. The majority of the financial markets in general are on a bit of a knife edge. Crypto as a market itself realistically is quite highly correlated with the general equities and wider markets. So if we're seeing things like commodity prices skyrocket 50 to 100%, that's going to drive inflation for food, energy, transportation, absolutely everything. As a result of that direct inflation, prices going up, it looks more and more likely that GDP and economic growth will slow down. Therefore, you see less investment as investors and institutions de-risk their portfolios. That being said, something that I've said again, time and again as well, is that, if you are in this space for the long term, and that's what it's all about, it's about the long term, then these are great opportunities to continue investing in blue chip cryptocurrencies. We've got Quant here that's down 11% on the week. Hbar down 10% on the week, nearly 18% on the month. Still sort of in that really nice accumulation spot for Hbar. Some other projects as well that you need to sort of be aware of if you were invested in them previously. For example, Phantom, off the back of that recent news that we saw, down 33% or nearly 34% on the week. I recently published something over on my Twitter talking about the drawdown from all-time high. I'll show it later in this video. But what you guys need to understand as well is you need to believe that the projects will retake those all-time highs. It's no good holding on to a position that may never see those all-time highs because the technology wasn't as good as it was touted to be, or there are better competitors in the space that can fulfill those gaps effectively in the market. Anyway, flicking over, the thing that I kind of wanted to look at was the fact sheet from President Biden's executive order for cryptocurrency and digital assets has been released. There's a lot of information in here, so I'm not going to cover it all. I will leave it linked in the description if you guys want to read in your own time. However, we can see that the executive order calls for measures to protect US consumers, investors and businesses, protect US and global financial stability, as well as mitigate systemic risk, mitigate the illicit finance and national security risk posed by the illicit use of digital assets, promote US leadership in technology and economic competitiveness to reinforce US leadership in the global financial system. So this clearly here, this statement shows that they are seriously considering how cryptocurrency can integrate with existing technologies in order to maintain that economic competitiveness. They don't want to shun technology which is far superior to what's currently in place, because it's absolutely it would be an absolute sin for them to do so, to stump the growth of their nation. Not only that, we look at, or they talk about promoting equitable access to safe and affordable financial services. So again, they're talking about this regulation effectively protecting customers and consumers, but not blocking or banning crypto because it has a lot of technological prowess and advantage. And one of the final statements as well is exploring a US central bank digital currency, or CBDC. Something that I covered on the channel before is obviously EMTECH, working directly with Hedera. They use the HCS and HTS consensus services, and they are a sandbox for CBDC development. They work very closely with some central banks in Africa. So I think Ghana was one of the main governments that have been onboarded to utilize EMTECH sandbox to build their CBDC. And also we see a lot of CBDC development over in Asia, particularly South Korea, on top of Hedera. So Hedera could end up being a choice for the US government for CBDCs. I'll touch on something else in a minute, which also links in another Hedera project that is not directly referenced, but kind of alluded to in that paper we just saw from the US government. We can see here, obviously, with EMTECH, partnered with Hedera Hashgraph, IBM, MasterCard, Microsoft, some very big names and a very promising project. Looking at this tweet from Earthon Watkins, it's just a snippet from that article we just read over on the White House's paper, and it's one of the last things of Section 7A, potential uses of blockchain that could support monitoring or mitigating technologies to climate impacts, such as exchanging of liabilities for greenhouse gas emissions, water, and other natural or environmental assets. Now, for a lot of you that have been following me and following Hedera for a while, that should be sounding off alarm bells in your head immediately, because if we flick over, something I covered on the channel before is obviously Dovu, and they are a tokenized data economy for DeFi carbon offsetting. That literally goes hand in hand with that statement that we read in that paper. And they talk about the challenges in the carbon credit and sustainability industry, and Dovu have come about as a way to effectively tokenized data economy for DeFi carbon offsetting. It utilizes Hedera to inexpensively issue tokenized carbon credits to any person, business, or government in order to fund projects which remove, capture, or sequester carbon from the environment. We've spoken at depth in the past about why Dovu has chosen Hedera. No surprises there, but this is something that countries, corporations, or even individuals can use to buy, sell carbon credits, which represent carbon dioxide removal, capture, or sequestration through long-term projects. Carbon credits are generated when carbon sequestration projects raise funds to get the operations off the ground. When carbon credits are purchased, they represent a carbon offset and enable anyone to become carbon neutral or negative. This type of market mechanism has the potential to drive many industries and nations towards more sustainable business processes. That's a key word or phrase there, more sustainable business processes, as well as nations, and that's something that is being touted in that paper we just read. So there is some serious links here back and forth between those. If I flick over quickly as well, there's been a recent tweet by Blockworks, and that's from referencing a quote from the US Senator Cynthia Lummis saying, "The bill to fully integrate crypto into the financial system is almost ready." So again, going back to what I said, they're talking about regulation, yes, to protect people, which I think is a good thing, but they are not shunning the use of cryptocurrencies. It's completely the opposite of that. They are looking to integrate it into the financial system. So we could see integrations either through CBDCs, potentially Hedera, or it could also be remittances and payments. It could be XRP. So if this settlement between the SEC and XRP gets sort of settled in a short span of time from now, we may see their systems get integrated into the financial system because they are a remittance and micropayment system. If we also look at the expansion of crypto in general, we can see this from CNBC. Trading in NFTs has hit 17.6 billion last year, an increase of 21,000% from 2020. And then we also see Anthony on Biden's order saying, "We are being told by our government that Bitcoin is here to stay." And that's the key takeaway right now, is that Bitcoin and other cryptocurrencies is here to stay. We've got investment banks and institutions exploring and offering Bitcoin and other types of crypto investments directly to clients. We have giant financial service firms exploring over-the-counter bilateral crypto options. We have governments, the US government, talking about CBDCs and financial system integration. So it's definitely here to stay. The other thing I wanted to touch on in this video is, again, looking more deeply at Hedera. There is another job posting on Hedera's website for a demand generation manager. So again, previous video covering the 2022 marketing plan with their substantially increased budget. They're obviously looking to hire a demand generation manager to keep marketing the project and expand that reach that they're currently looking for organically. So we see here 1+ years of business-to-business demand generation, proven experience developing and executing marketing campaigns, engaging content creation for awareness and demand generation campaigns, marketing or automation, Marketo, Pardot, and HubSpot, strong reporting capabilities with the ability to track campaign performance and spend down to granular details. So we can see Hedera are very serious about their marketing this year. The last segment of this video is going to be me looking at another use case, and a very exciting one, as it ties back into DeFi on Hedera, and that is AllianceBlock. And they seamlessly bring DeFi and TradFi together. They are built on top of Hedera, and this is incredibly exciting. As I've mentioned previously, we are getting very, very close. We're several weeks away now from Q2, where we will see DeFi and staking start to come online for Hedera. I think this will be a big turning point for the ecosystem in general. If we look at the partnerships for AllianceBlock, we can see there are some substantial names here. Quant being one of my personal favorites. We've also got Chainlink, another interoperability chain, AWS, Active, FinLab, tons and tons of different companies, API 3, which I know Matt Chase likes to talk about quite frequently. Obviously, we've got Hedera, Hashgraph, Pangolin, Polygon, lots and lots of different businesses that are involved with AllianceBlock, and obviously they are building on top of Hedera. So AllianceBlock is building the future of finance. It is creating a protocol that will bridge centralized finance or decentralized finance, DeFi, and traditional finance, TradFi, allowing both sectors to benefit from one another. AllianceBlock's Alliance Bridge, a product aimed at further enhancing interoperability and achieving AllianceBlock's ambition to become blockchain agnostic, is governed by a set of validators. It's important that these validators are synchronized to ensure transparency and accuracy. AllianceBlock's Alliance Bridge uses the Hedera consensus service to create an immutable and verifiable log of transactions between the validator network. They talk here about using or becoming blockchain agnostic so they can merge DeFi and traditional finance together across multiple different chains, but they have chosen the best technology, the Hedera consensus service, to create their immutable and verifiable log of transactions. They had hundreds, if not thousands, of different blockchain technologies to utilize, and they have chosen Hedera, and more specifically, they have chosen the HCS or Hashgraph. We can see here there as well, they're enabling cross-chain capabilities. AllianceBlock sought a scalable solution to provide transparent auditability to their validator network, something that I touched on in yesterday's video when we talk about staking, proxy and validation nodes and networks are very, very important that don't compromise on security. The HCS met their requirements, capable of thousands of transactions per second with low and predictable fees. Again, this is something that I've covered several times, not only on my Twitter via infographics, but in these videos. Predictable fees are incredibly important for big businesses that are looking for massive solutions. A case in point example is that Phantom tweet that I released showing that they claim that their transaction fees are a couple of cents, but because it's in the it's denominated in the token Phantom itself, and when they saw congestion on the network due to that massive sell-off, the transaction fee skyrocketed to nearly $2 a transaction. That's thousands of % of increase over the claimed transaction fee. That is not scalable or not ideal for businesses at all. It's not something that they will be able to justify. They cannot justify running an application, say Microsoft or AWS or someone builds an application on top of Hedera or any other blockchain, and then as soon as they see a demand spike due to a new onboarding of clients or some network activity, their fees skyrocket 1,000%. It's just not going to happen, and it would not cut the mustard with a lot of big businesses. That is a key selling point of Hedera, and it's part of how Hedera has been set up for scalability and enterprise solutions as being one of the integral pieces of the puzzle for this ecosystem, something that many other blockchains have completely overlooked. And I've said before, it's because a lot of these other blockchains have just jumped on the DeFi bandwagon. They weren't particularly interested in the wider use cases or the ecosystem growth for enterprises, something that Hedera has had in their roadmap since day dot. We see here, finally touching on this, the Bridge Validator Network monitors events added to the Hedera public ledger to perform a set of predefined functions across other networks. So we can see how AllianceBlock is bringing together all of the decentralized finance platforms and then trying to merge that with traditional finance. Again, it goes hand in hand with what we've spoken about with institutions coming online, as well as the US government and CBDCs. It's all starting to roll up into a bigger picture, something that I've been speaking about a lot on this channel in recent time. Anyway, guys, I hope you enjoyed this video. Again, it was a slightly longer one. Please leave a like, drop a comment, interact. I'd love to know your thoughts on this, and I'd love to know your thoughts as well on what we believe is going to happen in Q2 for Hedera, as I think it's going to be pretty massive. Anyway, I'll catch you on the next one. Cheers for watching. Bye.